Good morning, good afternoon, good evening. Here with our Denver metro area market update. Inventory rose as expected, as I mentioned last week, coming off of Labor Day weekend. Now into the weeks of September, more people listed their homes. That went up. Closings went down, but one of the little surprises is buyers pulled back just a tad bit. We've been running around the 1,700 homes going under contract each week, and this week dropped down into the 1,300s. So I think that's the story is around rates. Rates continue to go up. This morning, the CPI, Consumer Price Index, was released, and analysts expected a month-over-month drop, a small drop, 0.1%, and it actually went up 0.1%. So just the opposite of what they expected. And year over year, 8.3, which, in relative speaking, is actually down. We had our highest was 2 months ago. It was a 9% year over year. We went to 8.8.5, and then to 8.3. But it's still high. Still, as we all know, what we're paying for everything has continued to increase. If you've seen my other updates, gas prices do continue to drop, which is a good part there. Airlines have dropped, but everything else we're paying for has increased. Again, I looked back at some history. This year is definitely the end of last year into this year is inflation is the story, and so with that, the Fed keeps raising their rates. But for us, in the real estate market, mortgage rates tend to follow specifically the CPI. The Fed moves don't really impact it because that's short-term money, but the long-term money follows that inflation number. So inflation goes up, rates will go up. As inflation starts to moderate, we'll see those rates start turning back down. Have any questions on that? Let me know. Everybody have a great week.